working through assumptions for the common equity for Hasbro. So in general, we think about common equity. It's going to be, that is, the end of year figure is going to be equal to the prior year figure. We'll add addition to retained earnings, which is net income minus dividends. Well, we would add any new offerings of stock, that is seasoned equity offering. That would come off, we'd be able to see that historically off the cash flow statement. And stock repurchases, if the stock doesn't even buy it, if the firm doesn't even buybacks or stock repurchases, again, that would be on the cash flow statement. And then we've got some other things such as stock-based compensation, other comprehensive gain or loss, which the other comprehensive gain or loss would be like foreign exchange, transactions, those things. I say transactions, gains or losses on foreign exchange, that is foreign currency. If you've got overseas operations, backing up on the stock-based compensation, that would be stock options that are issued to employees that they actually exercise, those type of things. So we're actually going to combine that those two things into other, as opposed to breaking them down into individual, just as a little bit of a simplification here, a little bit of a shortcut. All right, so let's first do a split. So Alt W for view, S for split, and we'll first get the common equity total end of year, and hit F6 to go up here, and we'll navigate to where that is. So that's going to be off the balance sheet, and we can just copy that and paste it. Okay, so again, that's the year-end figures. All right, so prior year would just be equal to D176 there, and then addition to retained earnings, as an indicator here, that's going to be net income minus the dividends. So we'll go back up here, and we'll navigate to the net income, or to the, right, so there's our net income, and then subtract from that and navigate to the dividends declared. All right, so that should be our addition to retained earnings. We'll be able to copy those over. Seasoned equity offerings, again, that would show up on the cash flow statement. Of course, there'd be some discussion in the 10K. We can take a quick glance. Cash flow statement here, and that would be under financing activities. Okay, so here's the financing activities. All right, and there is purchases of common stock, but nothing about issuing common stock. Okay, let's have the stock-based compensation and some other things. So we're going to just say that this is 0. We'll hard code that. It's the same for each year. Repurchases we just looked at. So here we got the repurchases. It's got shown as a negative on the cash flow statement. So I'll put equal a negative and just pick that up for our purposes. Okay, you'll see different folks do different things on the signs, of course. And then the other, we're going to actually back into that. All right. So just thinking about this number here. Okay, if we take the end of year and subtract out the beginning of year, we're going to subtract anything that we would have been adding. Okay, so we'll subtract out the retained earnings, we'll subtract out the stock offerings, and we would add actually the stock repurchases. So again, we're basically solving for this other category to make this work out. All right. Okay, and we'll do a little check down here because these are, I could have made a mistake in my formula here. All right, so do a little check here. So we would take, again, this figure plus this retained earnings plus any seasoned equity offering, subtract out the stock repurchases. We're treating this other as a positive figure, so we would add it, And the question is, does that equal to our figure here? And it does, right? So we can copy and paste that. And what this enables us to do, looking at the historical, is to get an idea of what's going to happen going forward, or in terms of forecasting. So in terms of making assumptions, the additional retained earnings, that's by definition the net income minus dividends, so we don't need to make an assumption there because we are going to be computing net income and dividends. We'll have to make an assumption somewhere else about the dividends. On the stock offerings, those have been 0. There's no discussion on 10K about stock offerings, so we'll assume that that continues to be 0. Stock repurchases, we can see that it has changed, changed over time. And I did some looked at the 10K in this regard in terms of years going forward. It doesn't say how much each year going forward, but they do have a repurchase program that's still active. And at this point, roughly, I think it's $327 million is still available for that. So we're going to assume that that this is actually going to be fixed, and then we'll kind of look at these numbers to see, well, what happens on the other. So on our assumptions then, for the seasoned equity offering, we're going to assume 0 based on past, as well as no discussion of anything going forward. In general, seasoned equity offerings occur fairly infrequently for most firms. Stock repurchases, on the other hand, that's actually pretty common, and again, based on prior year and some discussion in the 10K, we'll go with that prior year figure because that does fit within what's available. And then for the other, it's moving around. There's no reason to necessarily go with any particular figure, so we'll just go with the fixed at the last amount. We're going to straight line that for the next 2 years, or keep it fixed the next 2 years. So we will need to talk about still need to talk about dividends, of course.